Hey guys, welcome to the London session recap for Tuesday, the 29th of March 2022. So, as you guys know, probably sick of hearing me saying it now, but we are coming off that major monthly, weekly, and daily extreme demand. So, my kind of overall longer term bias over the next few weeks and potentially months is we're going to see a bit more of a deeper pullback, at least into more of the premium of this larger daily swing range that we have. Okay, I would not be surprised at all if we started to see that. So that's in the back of my mind, but obviously for the sort of more immediate future, i.e. intraday sort of biases for just kind of purely trading for a particular session, we're moving sideways, right? There's no real very clear high time frame intention. I spoke about this quite at length in the Q&A call yesterday, but kind of the more simpler and quicker analysis is we had this initial demand chain, it then failed, right? Supply was then looking like it was holding or it was more so in control. So for me, the kind of simple analysis would be, okay, let's look for longs into the supply to then look for shorts to then potentially target that weak low. This is what I was saying though, overall, if you were to kind of delete all of this analysis and just kind of look at price, we're not really going anywhere, we're just moving sideways. So this is where just be a little bit more nimble with your management, kind of use the M15 as sort of your immediate bias, wait for price to come into those well priced POIs, ideally, shorting from the top at the extremes, longing from the bottom, staying generally out of the middle. That's where the hardest trades are going to be. And yeah, let's just see which way price kind of eventually really wants to commit to itself, because yeah, I think it was decent to be running with the idea that this was going to hold. And we're going to continue down. There's obviously been a bit of more Russia and Ukraine news, which has led to some risk on, which now looks like we potentially might be pulling out of the supply chain. However, I would still refine that kind of up towards the highs. There may still be supply within there that can contain price. But yeah, so nothing really too clear on the 4-hour chart. If we look at the M15, just delete some of these annotations. Cool, so yeah, so we're trading within, well, you guys can see the range, try to make it as clear as possible. This being the swing high, that broke the swing low, okay? And then once we obviously had that pullback, so trading within the M15 swing low and the M15 swing high up there, with this being the EQ of the range. If you can't see that on the recording because it's quite faint. So coming into London, where was price? Well, price was around here, okay? So not quite in the premium. Just try and tidy this up a little bit. So there's kind of two phases of, I guess, how the London session went down. So the first bit was where we had this initial potential supply chain forming, right? And as price was coming into here, I was happy to look for shorts from here. But what I wasn't happy about, and what I knew made this a lot lower probability to short from here, was that these were all weak highs. And they're obviously very obvious and equal highs building below the mitigated supply above as potential inducement. But let's kind of just go through the internal structure here, just because I know some people might not quite be able to follow. So the M15 internal structure all the way over here when we're coming down, right, is bearish. I think we can all see that reasonably clearly. Price is bearish and it comes down. Now as it moves up here, we have a bullish M15 shock here, right? Because essentially we have down move, an up movement, and then all of these candles break the prior candles low, right? And then all of this moves sideways. It doesn't break the high or the low until over here, right? And then we keep being bearish, then we pull back, then we come down, and then we switch bullish in terms of the internal structure. So then price breaks all those candles highs, then we pull back, then it breaks all of those candles highs. That's all part of one up move, okay? It never took out that low, so the internal structure stayed bullish again. Now at this point here, it just wicked it on the state of feed by about a micro pip. Okay, so then at that point, we're trading between this high here, and then remember for internal structure, we always take the nearest low, okay? So we wouldn't take the lowest like we would a swing structure, we take the nearest, okay? So if we look back from this new high, right, I'm just getting rid of these other lines, where is the last, or I should say the nearest candle that failed to break the prior candle's high? If we look back, that they all broke the prior candle's high. It's all part of the up move. Okay, this candle here failed to break the prior candle's high. So that means that this is the nearest internal low, right? Because you can see we had the up movement, the down movement, and then that's all one up movement. Okay, so basically that means we are trading between this internal range at this point. So although we had supply here, right, it came into the market, price respected it, it came down, right, price came into here, and it came down, you can start to see that supply holding. None of those levels actually broke any internal structure, right? It's just trading between the high, the internal high, and the internal low. So, yes, this comes down and it breaks this low here, but this low is what essentially we would call substructure. It all gets a bit confusing. That's why we try and keep structure very, very simplified. And in this instance, right, it didn't break any structure. So I knew those highs were weak. But this is where structure can obviously get a little bit complicated, because you can go, well, this supply here, it did, break these levels here. Again, this supply here, it broke this low here. And that's why, even though I would consider these to be weak highs, weak internal highs, supply chains, you can still trade from supply chains. Okay, so another simple way of thinking about this is we have two main confluences. First, we have structure that sits at the top of the chain, or that's a bad word to use, I shouldn't say chain. Let's say it sits at the top of the pile or order for confluences. Structure first, right? And then supply and demand comes in behind that. So if structurally these are weak highs, that's not great. But the next thing we can then look at, especially when price is ranging, is supply and demand. And at this point, if it looks like supply is holding, we've had two mitigations. It's with the M15 trend, right? Sometimes you can trade from weak structure, and this can hold and then it can end up going. So that's why personally I was happy to trade from here. Okay, so I knew that these were weak highs. It was likely they were going to be inducement for above. I did put that on in the annotation, the text annotation in the pre-session analysis, but I personally was happy to take the risk. Even this high swept this little high here, etc. If it's set up within here, in the end it didn't give an M1 entry model, so avoided the trade. But this again would be the type of place I wouldn't want to take a risk entry or anything that's quite an aggressive entry. Why? Because these are lower probability POIs. The higher probability that the POI or the overall higher time frame story, the more aggressive you can be with the M1 entry model. I.e. when it comes up to levels like this where they're much higher probability, then if you just get kind of a quick chock or whatever without the full clean entry model, then it's worth just trying to get in. But down here I want to see a lot more. I want to be a lot more convinced that price is really wanting to hold from this level, give us a nice liquidation sweep, etc., and then we could look for that level there. So yeah, if I had to set up, I personally would have been happy to take it, but I was going into that fully understanding it's reasonably likely these highs were going to go. But I've seen enough instances, and also when supply chains from weak highs can hold. It's pro M15 trend, it's just about in the premium. I personally would have been happy to take it, but yeah, in the end it didn't hold and price shot up. Now at this point, I know quite a lot of you had refined this buy to sell supply to the wick, right? And then you were looking for M1 entries within here. Now, there's nothing wrong with that. It's absolutely valid. It's an M15 POI within a 4-hour zone. It's got nice inducement, etc., etc. It flipped its demand. So that's fine. I don't want you guys to necessarily overthink it, but I just want to explain the reasons as to why I personally wasn't looking at it, and maybe what you might want to consider to bring into your own trading potentially going forward. And basically the main and very simple reason why is the pivot. So the distal of the pivot, we take the full candle, it had already been mitigated twice, but it was also the manner in which it was mitigated, right? So price came into here, and then look, it caused this big move that tried to take out the lows and then failed to do so. Again, we had another mitigation here, it's had this movement away. So for me, I just try and think about it a bit more logically. What are the odds that there are going to be enough orders left within here to now cause another, significant move? Of course, it can happen. I've seen that happen. The zone is fully valid until price trades all the way through, like it did at this point here. So it can be worth the risk. Likewise, if we look at if we look at the 4-hour chart, this is kind of another good example of when it can play out. This zone here clearly already mitigated. Zoom in, right? Clearly mitigated and caused a big movement away. However, until price completely trades through the zone, it's still valid. There can still be orders within here. This is a perfect example of where it's played out, right? Because it's come in, it's tapped into an M15 zone within here, and it's ended up causing a move, which looks like it now may go on to break out the supply chain. It could end up being a decent move, who knows, right? But that is an example where mitigated POIs that have caused a move can still play out. So that's why I'm trying to make it very clear. It's more than valid to still look from trades within here. Some people don't even, as long as the EQ hasn't yet been met, they're still happy to look for trades, i.e. the EQ of the zone, right? Just try and come up with some sort of rule. Just trying to explain for me the reason why I had it drawn across here in my pre-session analysis and everything. The reason why I wasn't looking at it is I just saw it was mitigated twice. Both caused decent moves away. There's a nice clear unmitigated zone here and here. So I'm happy to just sort of leave that alone. Also, with the amount of momentum it came in, it was a very little corrective pullback on the M1. Let's take a look at it right here. I just wasn't convinced by it at all, really. Whereas maybe if we had to come in, given a nice real clear liquidation, right, and then the usual entry model, flip, come in, etc., maybe I would have been a bit more tempted, but at this point, right, it was just kind of very, very impulsive. Gave that little chock there. I'm not even considering it, but I know some people took the flip, and that's cool, because if this is within an M15 POI, then yeah, that's fine. Price came into your demand zone, it reacted, so you draw the line across from the base of the reaction to the top of the reaction. Only once you get the candle closure, if that's within your rule, would you then have the flip. Okay, so that would have been a loss there. Now for me, the flip did not sweep liquidity, because that's where price pulls back, right? You have the inside bar, but then the high of that inside bar never breaks, right? So it never gets swept, it just goes down, right? So that can potentially explain why it does end up getting swept itself, mitigates this extreme supply, right? And then we move down. Now at this point, I think there's actually a bit more confidence, because now you've seen supply starting to, some people like to call it that first level of respect. You're starting to see supply starting to hold. We're seeing demand start to fail. We've got a much clearer sweep of liquidity, right? Because this high here, boom, that gets swept, right? And then we push down with a bit more momentum. We have some nice inducement here. So this would be, in my opinion, a bit more of a confidence, right? That double confirmation entry. The only thing against that, as you can see, it's impulsive, right? This is where demand was that caused the M15 and those highs, that supply to fail. At this point, price has now come back and mitigated this, essentially, right? Obviously, it's a bit more easy to see with the benefit of hindsight as well, but now that's probably done its job, it's pulled back, and now you're trying to short against that if you traded from here. So my kind of overall analysis of if you took that flip, or if you took here, or maybe even took that extreme, I think they're valid. I think they have a decent edge, right? You are still trading from an M15 supply zone in the premium pro trend within a 4-hour zone, etc., etc. So I wouldn't necessarily overthink it, but just explaining the reasons as to why I wasn't really looking at it, and pointing out what I can see as a negative confidence as to why, I think that's a bit more aggressive. But then when we came into, actually, let me just explain this why I didn't, ended up trading an entry from these weak highs down here. You can see price came in. Yes, there was actually a chock, and I actually missed this live. I still had my chock line level drew down here as well, so it didn't even come close for me considering it. But then I realized afterwards actually that this candle here, right, it broke that high, which means then this becomes a low, because you have the down movement, the pullback that broke the high. So then that means that actually the true chock, which is what I missed live, was here. But even if I had spotted it correctly, there's still no trade here, right? Demand holds, price never closes below the reaction. That's just not a trade I'd ever want to take. Especially considering how low probability this POI would be overall. So yeah, the C would avoid you from that loss, the confirmation entry. If you took a loss in here, I think it's fine. I've kind of hopefully explained clearly why. But now we come into the high probability M15 POI, right? This one nested within the 4-hour supply zone. It's part of a supply chain, right? So you have this mitigation, we sweep the liquidity, very decent movement with a lot of momentum, right? That went on to break structure. Essentially have that, well, all of this is as inducement, blah, blah, blah. It's a very clean zone. Now, the only thing I could point out that's negative about it, and we spoke about this quite a bit in the Q&A call yesterday, was this candle here mitigated it, because when the supply was created, price came in and filled some orders and then continued down. So yeah, this is where, I don't want to talk about this now because we spoke about it at length, but this is where a little bit of, I don't want to say discretion comes in, but this is where you kind of have to read between the lines a little bit. And I don't really personally view this as like a properly mitigated POI. It would be a lot more ideal if it was completely fresh. But when it's kind of just a quick little tap in, for me, this is kind of just one straight movement. It's not like we came down, then we had a nice pull back into it, filled up orders, and then had something like that. For me, I see these zones play out way more often than they don't. So whereas this, you can see this is completely different, right? Price has come in and it's had a big movement away. That's why I would classify that as basically a proper mitigation, and this I would still classify that as pretty much unmitigated. Another good example, I think there was one last week on the M15. Let me find where it was. Here, yeah, so this one here, right, this extreme. I originally had this extreme zone drawn to this wick because I essentially viewed this buy to sell as mitigated, right? Because when it was created here, price came out, then it came in and filled up the orders, and then it continued down. But as you'll see, you see these play out a lot when it's kind of just that initial little tap in with a wick right at the start of the move, because really it's kind of just sort of one straight push down. And that's kind of the little nuance in which I find that these tend to hold, rather than if it had kind of done that and then had a bit more of a pullback into it and then did that, then I'd be looking at this range here. But when it's kind of just a quick wick and it continues down, generally they can play out. And also when it's the very, very extreme part of the supply chain, etc., etc. That's kind of a good example of where this sort of zone, I don't really classify it as mitigated, but this would be. So hopefully that's clear. So we had a tap into there, we hit the M1 refined zone, and then we had an M15 chock. So yeah, that would have been a valid risk entry if you use refined M1 zones within the M15 zone. That was quite impulsive. I would have much preferred it if there was a nice liquidity sweep, right? The usual thing we look for. But this is what it's saying, right? If the whole high time frame story has been built, and if the POI is high probability, is in the M15 POI, then you can be more aggressive with the M1 entry. But when the M15 POI is lower probability, that's when you want to be more conservative with the M1 entry, and you want to see a much cleaner M1 entry model, right? So in here, as soon as we had that chock, we had a demand fail, I'm straight away then happy to start looking for entries because I just want to get in. Everything's happened that I want to see happen now. Now I'm literally almost looking for an excuse to get in. So once we had the chock, this was really the only zone you can enter within, right? You might want to cover the extreme wick to be a little bit safer. So I set my entry order on here, essentially viewing that as a flip as well, right? Obviously it didn't sweep, but you know, the extremes are mitigated at this point. Yeah, it could tap into the wick, but that's what I'm saying. You can cover it if you want. I personally didn't. I just had my stopper buy on the high, just missed, didn't get tagged in. My order was a little bit higher up, actually, it's quite a big POI. And then we started selling off. Now at this point, I didn't really like this because on the M15, we had this POI here, right? Now the reason why this is a valid M15 POI is because it broke internal structure, right? We came up, we pulled back, and then we broke that internal high here. So that is M15 demand I'm cautious about. Would I ever want to buy from here? Do I expect to continue? Not really. But do I want to short into it? Not necessarily. So I wanted to see this fail. So the moment we kind of started to trade into here, I actually cancelled my order straight away because I just wasn't keen on the whole setup and I wanted to get the chock and ideally demand fail. And then what I thought would happen is then we'd get a nice big M15 POI here. We'd probably mess around and do this through the London low, and then that would be a setup for New York. Okay, just because that's what I see happens a lot. Now, then I was following the M1 price action, right? We can see these supplies starting to hold. We come into M1 demand, supply then holds again, and then the reaction from demand fails, okay? So anywhere between the bottom of the reaction to the top of the reaction, anywhere within that orange box is the supply that flips this demand zone, right? Once we get the failed reaction. But as once price actually trades through here, and it was only by a micro pip, that demand has completely failed, and we have a confirmed M15 chock. Now I was a lot more interested. I still viewed this as aggressive, and it did, I'll be completely honest, I did have to think about it for a few minutes. It wasn't like a super clean entry like up here where, I don't really have any doubts. I'm setting my entry order on straight away. I was and ahhing about this and trying to weigh it up overall. Just being transparent. I don't always have those easy decisions where you just make it, and this is what I'm kind of debating, is it worth the risk? But again, this is what I say to myself anyway, it might help you guys. When I've seen the POI that I really love, when that's been mitigated, then I'm willing to be a bit more aggressive. I'm happy to accept taking losses on trades that maybe are a bit further in the run, etc., etc. So at that point, I was happy to then hit it. So we have the supply chain, we have the M1 demand failing with the failed reaction. So this has been the extreme of the reaction leg. This is the flip. We've just refined it. Instead of taking it from the base of the reaction all the way to the top, we've just refined it to the pivot. We had the M15 chock. M15 demand had then technically failed once we traded through it by a micro pip. So yeah, I was happy to hit it from here, and then I would have been looking at the extreme if I had got stopped out as well and if I had pushed up higher. So yeah, this isn't a trade that I take a lot, but this is something I'm trying to do a lot more. Following these M1 continuations further in the leg, we have the supply chain, we have the failed reaction, we have the M15 chock, we have the M15 demand failing. The only thing it really didn't have was a clear sweep liquidity within here. But with that kind of third touch, generally I find that to be the highest probability. 2 pips stop above the high, more than happy to take that. 20% off of 4R, and then pretty much a total of 80% volume off at 10R in that M15 demand. And then tapped into sort of this not extreme, but the actual demand chain, because this movement here during London during Frankfurt failed to touch into here. We came into here and then it timed in nicely with some news, unplanned news coming across the headlines, and it went to the upside. So a really good example of paying yourself, taking a decent amount of volume off the table when you're running over 10R. I always say this to you guys, I'm not in the business of trying to swing my dick around with these 200R trades or whatever with full volume on. I'm happy anywhere around 10R, boom, that's me. Like I don't care kind of what strategy you trade. 10R is amazing by anyone's standards, especially when you start to trade, decent capital. I mean, to be fair, if you can hold on decent volume on a significantly sized account over 10R, you have more solid psychology than me. I can't do it. So hats off to you if you can. But yeah, this is the realm in which things work really well for me. 2 pip stop, trying to catch a 20 pip move within that session. I'm out, pay yourself, see you later, happy days. So yeah, but if you were targeting, the week lows, there's nothing wrong with that. Let me just clean this up a little bit in terms of technical theory, because that's what we run with, right? We expect the weekend 15 swing low to be run, but it's not always as simple as that, right? We're moving sideways, we're chopping and ranging overall. We're in that market condition where the hard time frame intention is unclear. We know there's a lot of uncertainty in terms of fundamentals, so I'd rather get in and out and pay myself there. Now, we'll quickly mention, in terms of once I was within this entry, I wasn't really interested in looking for further entries at this point. Even if I wasn't in this, I would probably, even be a bit more hesitant, just because at this point it's falling quite correctively overall. I wouldn't have necessarily had a lot of confidence that it's going. If anything, I'd be looking at this level here, because I want to stick to the extremes of the chain, right? Because yes, this could be valid, this zone here, right? It's swept liquidity. It's flipped this demand here, right? Once price pushes down, it has inducement. So you could have been looking at this zone here, but then I wouldn't have confidence that it's not going to come for the zone above. So this is where continuations can get pretty tricky the further and further you get in the run. So that's why I want to stick as part of the chain. So if I was looking at any zone, if I wasn't already in it, this would have been the zone I was looking at once we had that break of structure there. I would have been happy to probably set an order on that if I still liked it. But when it's kind of down here, I'm not really that keen to chase it. But that's just me personally. So yeah, that kind of wraps up that. Hope you guys took some value from that. So yeah, if you took the loss in this area, I wouldn't necessarily overthink it. That's just my view on kind of why I didn't really like that M15 POI, but there's probably going to be plenty of times when it plays out. I'm not 100% sure. I'm trying to kind of think this and kind of rack my brain. I need to probably dive through some of my old markups and my journal and have a look to see if I've taken many trades like that, where we've already had decent mitigations, right, from the M15 POI, where we already had solid moves away, to see if I've taken many trades like that. But I don't believe I have, especially with the way this all shaped up. But let's have a quick look at what's going on. So looking like we are now breaking out of that supply chain. All right, so let's clear this up a little bit. Let's see what we do. All right, demand is now holding. The supply looks like it is now failing. So what I would say is probably going to happen based on this is, like I was saying, we're coming off that monthly and weekly and daily demand, and we're kind of getting those larger internal swings of price action. We've had that corrective pullback, right? If you look at that kind of being that low, and it's now looking like we're probably going to take out this high, I would say is the most probable scenario, and we're going to get that deeper pullback. So, there may be a bit of supply within here, it might give a bit of reaction, but ultimately I would probably now expect this high to go because it's failed to take out this low here, right? Next sort of supply level I'll be looking at on the 4 hour, that's a bit more significant, is probably these levels up here. All right, but then we can just look to play the shorts into something like this, all right, again, until potentially get into that premium supply, and then you'd be looking for clear change, character or trend change, and then potentially we can look for something like that. But I don't like getting way too far ahead of myself with forecasts like that. But yeah, right now, let's see if we can get a solid close up above here, then we'll have some 4 hour demand to work with, right? And then we can potentially start to look to target this high here, and potentially up and towards this region. But yeah, let's see how that goes. What's the M15 saying? Are we about to switch bullish, or have we already? Haven't quite yet, but it's looking like we might. Extreme supply has now failed, so this M15 supplies chains fails. We can get rid of all of these, clean it up. I'll do this later, but anyway, so yeah, let's see what happens. I reckon that's probably about to switch bullish, then we can wait for price to pull down into these extreme levels, but it's looking like a lot of momentum. Anyway, what I'll do, obviously it's looking like a lot is going to change between now and New York, so I'll post a little markup before that with a bit more of an accurate assessment. But yeah, I think on the 4 hour chart now, if we can get a solid close, to be fair, there's another 3 hours to go on this candle, but imagine it closed like this, then yeah, I'd probably be saying there's a solid chance we're going to take out this high now. So be interesting to see how we develop. All right, guys, have a good New York, and I'll see you in the next one.